Hi everyone, what a day today. We tried to go higher early in the session. We did end up getting just a little bit of a bounce, but we couldn't even make it to the level 599, and then we retested 591 and then broke through all of those levels, pushing to the 585 level that we've been talking about. This continues to look very, very bearish. We did get a pullback in time and a bigger breakdown, so continues to look bearish. Let's take a look at the broader charts and see if we can find any different direction for tomorrow. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. In news today, we got Trump reconfirming the Mexico-Canada tariffs starting on March 4th, and then an additional 10% here for China. Absolutely not what the markets wanted to see. Terrible here for markets. Maybe this was driving some of the selling. I do think that it was at least a little bit, but this came out today. Same effect date for both of these, March 4th, 25% still for Mexico and Canada. These were delayed for 1 month, and he said that they paused them because they were going to help stop the pouring of illicit drugs into the United States. They say he provided this without evidence, but that's kind of ridiculous. There's quite a bit of good evidence that some of this illicit drugs are coming from China and flowing over the borders, specifically through Mexico. Not sure how much of it is coming from Canada, but it does seem to be flowing into the United States, and you can see here China already facing 10%, now an additional 10%, so 20% total, and 25% for Canada and Mexico. Not so great unless they try to lock down these borders here before the 4th. Moving over to fear and greed, absolutely cratered here to an 18, deep in the extreme fear category, from a 21 to an 18. A week ago we were at a 45, a year ago we were at a 75 in extreme greed, so the pendulum swings pretty aggressive, and here we are now at an 18, getting very, very close to that 125 EMA. In fact, it looks like we dipped just below it here on momentum. Extreme fear, we've been saying we're probably going to touch it. I thought we were going to do it here in January, but we pulled up, made a slightly higher high there, and now we've pulled back to it. Strength, still extreme fear. Breadth, still holding up, but selling off. It'll be interesting to see what that looks like later. Put call ratio jumping quite a lot above this peak here. Still think we're headed to the 0.85 to 0.9 area. Right now we are at 0.87. Volatility spiking as you would expect. We thought this was going to go into the area of that next trend line. I think it was in the 28 area. We're not quite there yet. We'll look at it on the charts. Safe haven demand cratering as you would expect. Extreme fear. And junk bonds actually hanging in there fairly well, relatively flat for the day in regular fear. Just a quick reminder here on seasonality, it was supposed to be extremely bearish into the end of the month. So far, so good on that bearishness. We've been talking about it. We called it in the weekend video. Peaked out. So far, we've sold into the end of the month and expecting at least one more day of selling based on this chart. Moving over to the economic calendar here, you can see core durable goods came in at a 0, worse than expectations. Previous number revised down to a 0.1 from a 0.3. Still positive, but not great. You also got initial jobless claims spiking here, 242,000. My guess is this is government employees. They've been seeing a tough time with Doge coming in and firing a bunch of people. You also got core PCE coming in a little bit hotter than expectations. Don't forget tomorrow you do have core and headline PCE data, so we get a little bit more inflation data tomorrow. That could absolutely be interesting if that comes in hot on the back of all of the other negative catalysts we've been seeing. That could absolutely provide another leg down here in markets. So you got core and headline PCE tomorrow morning. Definitely going to be interesting what we get from that. You also got Chicago PMI tomorrow at 9:45. Want to see that number come in relatively good. The other thing I forgot to mention here for today was GDP numbers. We did get GDP numbers at 2.3. That was in line with expectations. Price index a little bit higher than expectations. Not what you wanted to see there, but overall, these were good enough for the GDP data. Moving over to the charts, looking at the S&Ps, you can see it was down 1.6%, sold all session except for that slight bounce in the morning. Couldn't quite get to that 55 EMA. I was hoping to see 599, maybe even up here around 602 after the slightly bullish day we saw yesterday, but we couldn't do it. Sold off aggressive, and then once this level broke here at 591, then it was look out below. We took out this level here, closed through there, closed below the trend. Now your next target to the downside is 579.78 Feels like just a few days ago here we were in the 610 area up here, and just like that we're in the 585s, potentially looking at the 579, 580 area. Got the 144 EMA in here. That's what we're looking for as your next target, which gives you about another 1%, slightly less than 1% down move. Volume ramping, RSI continues to crater. Everything says this should go at least a little bit lower until we hit those oversold conditions. And you can see it here on the hourly chart. Gapped up into the open, tried to hold those, couldn't do it, consolidated at the level for like 4 hours. And then once it broke here on that 1 o'clock candle, continued to sell for 2 straight hours into the close. Look at the volume, massive volume into the close. We're below 585 now. So based on this, if we continue to close below it here, you're looking for that 579.78 level. Moving over to the Tasty charts here just for a moment, you can see we did have that pullback in time. We were in the middle of the range, wick rejection at that 55 EMA, wick rejection again at the 55 EMA, and we pushed right to that lowest ATR band. That was at 584.49, 584.50, touched that level, and now we're bouncing just a little bit. Right now it's sitting at 584.06, so not giving you a ton of room to the downside. You had this clean pullback in time, clean breakdown. We'll see if it can continue lower. Is it going to be like this where you pull back in time again and pull down? Either way, it's a little extended in the short term, but still looking very bearish. Moving over to the NASDAQ, similar thesis, 2.78% to the downside. Absolutely terrible. Similar move here. Tried to hit the level, couldn't do it, came up short. Once 514.92 broke, pushed right to the next one, 509. Took out the low here from the Tuesday. Once that went, we went all the way through my next level there at 503.52. Now you're looking for the next one, 498.44. You also got the 144 EMA right there at 498.55. So that's the target. Not a lot of downside left there, about 1/3%. We'll see if it can go a little bit more. You got the 200 as your next level, below that at 490.36. Structurally, very much not great, right? So you have a long consolidation. We're right at the lows of that consolidation. If it breaks through there, this could be quite dramatic. A definite change in structure here for the NASDAQ. Overall, not good at all. And then looking at it here on the hourly chart, you can see same thing, consolidated for 4 hours right at the level, 509.74. As soon as that broke, 2 hours of selling, took out the next level. Almost went to the next one, seeing a slight bounce after hours, huge volume on the selling. Everything still looks bad. Moving over to the Tasty charts here for the NASDAQ, similar thesis to the SPY charts. You can see pullback in time, couldn't quite hit those ATR bands. I thought that we might. ATR trailing stops, that was at 520.34. That was what I was looking for, a push into that zone. Couldn't get it, rejected at the 55 EMA, sold here, consolidated for a few hours, bigger breakdown to that lowest band. Again, you're extended. Lowest band is 501.38, 501.39. So I would expect at least a little bit more pullback in time, kind of like this here, where you just kind of hover, maybe slightly higher lows, but really not much of anything. Pullback in time, same price action, and then we'll be looking for that bigger leg down potentially. Overall, everything still looks very bearish, but definitely extended short term. Moving over to the Russell and the Dow. The Russell sold 1.5%, actually holding up quite a bit better than the NASDAQ. Interesting to see that. A little bit better than the SPY charts as well. The SPY was down 1.6, I believe. With the Russell, still selling off pretty brutally, but not as bad as those, which is interesting. The level is 211.88. Probably because the Russell was not sitting at all-time highs like everything else. Either way, we're kind of in this trend line zone here. So is it going to bounce from here? Definitely interesting to see. The trend line for tomorrow is going to be around that 211.50 area. The level for me, 211.88. So we're right in the zone. If it's going to bounce, it needs to do it here. If it doesn't bounce here, your next zone is probably here around that 205.07 level. You do have 208, but that's kind of an intermediate level. 205 is a little bit more important in my opinion. You can see this interesting low here from September. If it pushes through here, I would expect it to go to that next zone, which is about another 3 1/3, 3.5% lower. And then looking at the Dow was negative about 0.5%, but more importantly here, we closed below this level. So 432.78 has been the level for the last 4 days. We closed below it here. Is it going to sell to the next one? Potentially. That's about 1.5%. You got the 144 EMA below it at 1.6% at 1.6%. So we'll see if that matters. Either way, everything looks quite bearish, momentum bearish, RSI not quite there yet. I think we're probably going to go to that next level, 426.20. Moving over to the Mag 7. Mag 7 broke the trend, broke the next level, 296.73. Got the 144 EMA right there, 294.36. Is this zone going to hold? Seems unlikely. It was down pretty much in line with the NASDAQ, 2.63%. Momentum bearish. We are super oversold now at a 26.98 on the RSI. That might be why we're seeing just a smidgen of a bounce after hours, but that really doesn't mean anything to me. This is big selling, big waterfall sell-off. I think there's probably more in it, but this is a zone to watch. If you're still short, next level would be 290.65. Moving over to Apple and Microsoft. Apple was down 1.27%, still outperforming the broader markets, but still selling off like everything else. The level is 237.23, closed at 237.30, so technically it hasn't broken. Is it going to hold here? My guess is no, but it's not impossible. You can see we pushed up, touched 241.83 for a second, sold off to the level. Looking for this to go a little bit lower to 230.28 and maybe the trend here to 26.20. Got the 200 SMA there as well. Overall expecting this to sell. And then looking at Microsoft, it broke the key level that we've been watching. 394.22 was the level. We moved a little bit higher, hit the 9 EMA, touched it just for a second, and immediately sold. Momentum bearish, RSI bearish. Your next level here is 388.03, finally breaking through some of these lows. You got the low back here from 5 August. That is going to put you at 383.35. If it goes to that low, then you have about another 2 1/3% lower. My next level to there would be about 3.5. Either way, this has been a very, very long consolidation here on Microsoft. We've been watching it for seemingly ever, and now I think we're definitely starting to see these pretty significant breakdowns. Realistically, I think this could go to the next volume zone here if you're watching this volume profile. Got a big gap in volume through here. Next volume zone would take you into the 365 area. Should give you about another 7% lower potentially back into this area. So I think this is probably going to accelerate. Nothing looks good pretty much at all here today. Quick look at Tesla and NVIDIA. As you would expect, these continue to be dumpster fires. Tesla down another 3%, got the 200 SMA there at 278.14 on a closing price. My level 280.06. Is this zone going to hold up? Maybe. I would be very cautious here. If it breaks through there, there's basically nothing holding this up for a long time, it feels like. Your next zone would be somewhere around 254, maybe even lower, 244. So keep that in mind. Very important zone here for Tesla. And then you got NVIDIA selling off 8.48% on the back of earnings. Intraday, it was even more because we gapped up into the open and then sold 11% from top to bottom. Huge, huge sells here on NVIDIA. Not the place to be. Probably headed to these lows around 116, maybe as low as 113, the lows of this consolidation. If that level goes, my next level is here at 106.64. So let's go ahead and add a level. We're going to put it right there at 116.70, right at the low here from 27 January. If that level holds, you're in good shape. If it breaks, 106.64 is my next zone. Does not look good for me. Let's go ahead and extend out this trend line here as well. That takes you as low as 112.80, maybe a little lower, 112.20, somewhere in there. Either way, everything looks bearish, and this is no exception. Moving over to Amazon and Google, you can see Amazon down 2.6%, looking for that 144 EMA as your target at 202.93 as we broke back below 212.25. We got this big up candle on the Tuesday, slight continuation Wednesday, but then we got the big sell here today, fully engulfing both of those, continuing to look more bearish every day seemingly. And then looking at Google, another big down candle there as well, 2.5%, broke through the level 170.95. You got some trend support here, 168.92 potentially. If that level breaks, then you're looking for the low of this consolidation back here, which is right in that 161.59 area up to about 164, somewhere in here as your next zone of support. But you can see here now we are well below all the EMAs and SMAs. Definitely not a great sign. We got the cross of the 21 and the 55. Both of those signals are bearish. Moving over to consumer staples versus discretionaries. You got staples basically unchanged on the day. Markets continuing to hold these risk off assets. Tested the level, ended up holding support. We're below the trend, but we were below it yesterday as well. So really no change in terms of structure. Still above all the EMAs and SMAs on the staples charts, but looking looking at discretionaries down another 1.4%. It went to the trend. That's what we were looking for. Technically, it's below it, so your next support is 210.43. And below that, you got the 144 EMA there at 209.02. The other thing worth mentioning here is that you are in oversold conditions here now at a 26.94. It'd be interesting to see if we do start to see a little bit of a bounce from this area, just because we are so extended in the short term. But you can see the clear high, lower high setup, midpoint, broke that midpoint here to the clean lower low. Again, oversold, maybe we get a slight bounce, but I would expect it to continue to show lower lows and lower highs, at least for now. Moving over to sectors that did well today, you got real estate continuing to do well. I've continued to talk about it forever, it feels like. We've been talking about it since it started to climb back here in January. We're right at the level 42.85, but it was positive on a day where everything else was not. And then you can see financial, slight positive there as well, about 0.5%. Doesn't look as good as real estate here, but same premise. Stocks that have yields, stocks that do well in risk-off times are continuing to do well here. Moving over to breadth, as you would expect, breadth continues to weaken. It weakened yesterday, even though markets were fairly stable, which was a little bit of a sign to us today that this was going to continue to weaken. And sure enough, it did. Hasn't broken the trend yet here on the 20-day breadth, but 50-day, you can see clean double top, broke the level here, probably going to head lower, at least to 45. Realistically, the next level for me is the 40 level. And then if this continues to go here, that is not going to be a great sign at all. But this is not good structure on the 50-day, which means likely to continue to see market weakness. Even if we get buys, likely to see a lower high setup and a continued sell, in my opinion. Moving over to the dollar had a huge day today, up almost a full 1% at just over 0.75% there. Momentum bullish, RSI bullish, nice break back above the level 106.84. You got the 21 EMA there as resistance at 107.3, but we'll see if it can get above there. Either way, the dollar showing some really strong signs of life after a bit of a kind of consolidation. Up candle yesterday, big up candle here today. You can see clean break, big strong up candle. Probably on the GDP data, in line with expectations, taking that fear out of it. But either way, it seems like people are looking to get into dollars and out of stocks, at least for now. Moving over to bonds. Bonds did actually pull back a little bit. You kind of got a maybe double top here on J&K. Not a lot, but a little. 20 cents lower on that. Momentum stepping down. Maybe we're back into this kind of consolidation. We were kind of hoping for the break, but for now, it seems like we're going to reject from there. TLT also pulled back a little bit. Just 0.7. Obviously, it's been a run. Really, really strong 4 days in a row. Slight pullback here. Still think we're headed to 92.82. Right in this kind of zone here. Momentum step down, didn't quite hit overbought conditions. Maybe we pull back, hit 89, and then get a little bit more buying opportunity. Look for that 92 area, but either way, both of these still look bullish for me. Even if we do get a short-term pullback, I would expect them to go higher over the medium term. Moving over to the VIX, big spike on the VIX, over 10% higher here. We got up to a 21.12. The target right now is 24.90, 25, somewhere in here. Once we get to here, I think that's probably going to be where we turn around. We could see this maybe tomorrow or the next day. Almost overbought on the RSI, expecting one more spike higher here. See how it plays out. But that's what it looks like, at least for now. And then moving over to my accounts, I ended up making a decent amount of money on the day. I think I ended up netting around $300 on the day. So you like to see that. I added a little bit of money here as well to my Roth. I'm contributing to this year's Roth contributions, but lost a little bit of money on that. I don't like to hold short positions in my Roth account, so I just took that position off for a small loser, about $50. Nothing crazy, especially because the IWM was down over 1.5%. Could have lost a lot more, but I didn't. And then in my individual account, net profitable on the day, a couple $100 there. So overall, a good day considering how terrible everything looked across the board. And obviously, I have no positions on except for just a couple of treasury bills here, as I'm expecting to continue to see bearishness. Is it going to happen right away? Do we see a short-term bounce? I was hoping for a little bit stronger bounce early in the session, maybe another leg higher out of the consolidation, but couldn't do it. We broke the lows and continued lower. I held the calls that I had on and I added to them and managed to turn a bit of a profit. So overall, not bad. Like I said, no positions going into tomorrow. Think we could go either way just because we're so extended, but everything still looks very bearish. Let me know down in the comment section what you thought of the charts today. What do you think of the tariffs? How are they going to continue to impact markets? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.